All right. Thank you all so much for being here. We really appreciate it. My name is Dion Thompson, and I'm the chapter specialist at PEAK Grantmaking. I'm happy to welcome you to today's session with your part-time controller. We're truly excited to have you with us as we pilot this new Demo Days series over the course of the week. We hope you'll find real value in exploring a range of solutions designed to support work and spark new ideas. So on behalf of PEAK, I want to extend a heartfelt thank you to our wonderful partners at your part-time controller, Rachel DiMatteo, Jennifer Banks, and Justine Townsend. We deeply appreciate their ongoing support of PEAK, and we're grateful that they're taking the time to lead today's demo. As a reminder, all demo sessions will be recorded and shared with you afterwards, along with speaker contact information and any related resources you may find helpful. With that, I'm delighted to turn the mic over to our friends at your part-time controller.
Thank you so much, and good morning, everyone. It is a sunny day here in New York, so I apologize. I'm like a little bit washed out. I'm in my office, not my home office today, and I have a little bit less control of the lighting. But we are so grateful for the opportunity to be here today and demo our services to the PEAK community. Thank you so much for joining us. We really enjoyed the annual convening this year, and we're looking forward to getting even more involved with the PEAK community in years to come. So first, we'll introduce ourselves. I'm Rachel DiMatteo. I lead our New York office as well as our Foundations Specialization. And I've been working with nonprofits and foundations for the last 20 years, 12 of which with your part-time controller. And I'll let Jen and Justine say hello as well.
Good morning, everyone. It's wonderful to be here with you today. My name is Jen Banks, and I lead YPTC's Los Angeles office, which covers the breadth of Southern California. I'm very similar to Rachel. My entire career has really been in nonprofit accounting. So starting in public accounting with auditing and then working in-house for two nonprofits, and then getting to provide outsourced services to nonprofits and foundations. So kind of done the whole trifecta. It's wonderful to be here to tell you a bit more about what we do. And I'll hand it over to Justine.
Jen. I'm Justine Townsend. I lead our Arts and Culture Specialization at YPTC. I also teach financial management for arts leaders at the University of Houston in their Masters of Arts Leadership program. I have spent my entire career, just like these ladies, in nonprofits, starting as a nonprofit auditor and crossing the desk. And have worked with many different kinds of nonprofits, but primarily in the arts for my entire career. And I'm very excited to be here today. And I'll turn it back to Rachel.
Thank you. So here's our run-up show for today. If you have questions, feel free to put them in the chat. My colleague Deanna will be keeping an eye on it. I want this to be interesting and engaging for you. We have a fairly small group, so feel free to ask. And we'll also have some time for questions and sharing at the end. So first, the intro. Have you all heard of YPTC? We've been around for more than 30 years, serving nonprofits and foundations by providing best-in-class financial management services. And you'll have a better idea of what we mean by financial management as we talk through today. We work with over 2,000 nonprofits across the US, of which about 150 are foundations. So we know foundations well, but we also really know your grantee partners because that is the bulk of our client base. So we have a few poll questions today. If you want to participate, you can just scan the QR code there, and then it should bring you shortly to our first question. So I'll just give you a second to get situated with that. And then this first question is really just getting to know you all. What is your role at your foundation? And the QR code is also there if you need it. So grants management, programs team, executive director, CEO, other. All right. Other, is that maybe operations? All right. Well, thank you so much for participating and nice to meet you all. So before we dive into supporting grantees, a quick note that we do provide financial management services for foundations to support their internal finances. And that really ranges from accounting for investments to financial reporting to management and or the board of the foundation. And that might include forecasting, and it always includes analysis to translate the numbers into actionable insights. And we can do these services either on an interim basis to cover temporary leaves or gaps in a finance department, or on an ongoing basis, particularly if full-time support isn't needed due to the organization's size. And just to showcase a little bit of our foundation-specific work, this is an example of a report that one of our foundations likes to see to monitor their grant commitments. Especially because they are in the practice of making multi-year awards. And this really shows it by their 4 main areas of focus. And this is a fictional foundation name, We Are Generous Foundation. And then another way that we can even visualize grant spending is through a dashboard. And this really shows a budget versus actual by those 4 main areas of focus. And this visualization really gives you a literal picture of the respective size of each of these 4 areas and how much has been spent in each compared to budget. And then we also love to include this headline here at the top with the description to make it really easy for anyone to understand what this is trying to tell us, even if there's a new board member looking at this for the very first time. So we know that our audience today is interested in how to support grantee partners. So we can help to build capacity at your grantee partners. And we know from firsthand experience that nonprofits can have struggles in their finance department, like late audits, financial reporting being behind, short staff, limited financial knowledge. It's really our mission to build stronger nonprofit finance departments. So we are passionate about helping nonprofits overcome these challenges. We've broken our demo out today into 2 main sections. First, education, and then direct support. And in both, we're going to elaborate and give lots of examples. All right, so one way to make an impact on a nonprofit partner's financial problems is providing opportunities for education. I've been working with nonprofits, like I said, for 20 years, starting as an auditor before working with them internally. And something I've observed over that time is there is just such a deficit of financial knowledge in the sector. And funders really have an opportunity to provide support beyond the check by filling some of those knowledge gaps. So we're going to walk through 2 main approaches of providing capacity through education. So the first is out of the box. Here's some ideas of ways that we feel nonprofits need additional training. And at YPTC, we teach on these topics all the time through our national webinars, as well as private trainings for PSOs, nonprofit councils, foundations, United Ways. Because we've trained on these before, we have content and slides already developed, and we can turn it around fairly quickly. So a foundation may choose to provide webinars or even in-person trainings. And you might make that for all of your partners or limit it to certain cohorts. I was just recently working with a foundation on developing something for a cohort of one of their programs, which are really startup type nonprofits. So we were talking about meeting their specific needs. And in our webinars, we would always have a Q&A period built in to give the opportunity for questions. And in terms of the format, webinars are very convenient for people, and that might be important to your partners, but in person could also be an opportunity to convene people with their peer organizations for deeper learning and connection. So since this is a demo, here's a snapshot of how we approach training at YPTC. We know that accounting topics may seem dry to some people, especially if accounting is not their background, but our sessions are intentionally interactive and take content that could be complex and really break it down and make it accessible for people of all backgrounds. So you can see for yourself.
That money is restricted for a specific purpose. And most of the time you got to track all of that really carefully. And that's where that third dimension in the accounting system comes in. When we're nonprofit, accounting gets a little challenging. So in our accounting system like QuickBooks, we track it with the customer dimension, those people and entities that fund your organization. Now, funding can come from earned revenue. Think of like membership fees or tuition, but it can also come from contribution like grants and donations. And if those contributions have a designated purpose, that's the only way you can spend your funds. It's a restricted donation. Sometimes you get lucky and a donor like Mackenzie Scott hands your organization a check and says, use this however you need to. That's an unrestricted contribution. And this is like the Willy Wonka golden ticket for nonprofits, because you can use those funds however you see fit. And you can use it on a program that expands your mission. You can use it for fundraising efforts to increase your donor base, on admin costs to help grow your capacity. But oftentimes nonprofits are juggling the expectations and restrictions. They don't get funds like that. They get really restricted funds. And that's where things get tricky.
Thank you, Alicia. This is our webinar. So I know that foundations are talking more than ever about how they can support their partners. And in providing more, many are also asking their partners what they need rather than trying to guess or assume what they need. So in that spirit, we wanted to highlight a more custom or bespoke approach to training that really begins with getting feedback from your grantee partners. And I'll walk you through the general process of how this can work. And then Jennifer's gonna tell us about a real example of this in action. So pre-training preparation, we would work with you to co-develop a questionnaire to send in advance of the event to identify common needs to tailor webinar content to the most relevant and pressing needs of grantees. And from there, we would develop a webinar or a series to meet those needs. And of course, would have Q&A built in. And then post-training, we love to do a quick post-event survey to assess the training effectiveness. And then we can really use that feedback to refine coaching topics and identify future training opportunities. So now I'll let Jennifer walk you through a recent and actually an ongoing example of this.
Great. Thank you, Rachel. And yes, I'm very excited to share how we partnered with a large California foundation to strengthen nonprofit financial practices across their grantees. And this was a technical assistance project for a statewide program that invests in youth leadership and civic engagement. And this program has multiple cohorts of grantees, and this foundation has distributed over $300 million in funding. And their grantees, it was really a wide variety of organizations in terms of size and stage of the life cycle and maturity of the organizations. There were also several tribal organizations and kind of real smaller community-based grantees as well. And our goal really was simple. It was to help over 250 grantees build confidence and consistency in managing their funds and to address common funder desk audit pain points such as grantees inconsistently applying cost allocation methodologies. And then they were also really noticing a lack of internal controls. And they did have certain internal control standards and expectations that were required in the grant agreements in order to receive funding. So that was also something that they wanted us to address. So the first thing we really did was we just wanted to listen. So we started by meeting with the program team and their grant accountants to understand, really what success looked like for them and where their pain points were. And like I mentioned, kind of the biggest challenges from their end were cost allocations, ethical concerns around conflicts of interest when you might have multiple family members that work for the same nonprofit, or because, again, this was a program for youth, there were organizations that were giving cash stipends for youth, and they wanted to address some of the control issues around that. And then to make sure, we were addressing the needs of the grantees, we also surveyed 250, their cohort of 250 grantees. And this really gave us a clear picture of the topics that they felt that they needed the most help with. So after that, we then built the training. So we designed a 2-part webinar series focused on best practices in nonprofit finance and accounting. And we really tackled kind of the top 10 FAQs that came out of our conversations with the funder and the grantees. And then, as Rachel's kind of alluded to before, we definitely had Q&A sessions at the end to kind of address anything that we might have missed. So after the webinar series, the funder asked us to go even deeper with one-on-one coaching. So we didn't stop at just the webinars. We distilled those FAQs into 4 high-impact topics for 45-minute one-on-one coaching sessions. So we covered revenue recognition and grant tracking, cost allocations, internal controls, policies and procedures, and chart of accounts design. So grantees could sign up for multiple sessions on a first come, first served basis. So they had a chance to really dive into all 4 areas if they wanted. And we've definitely had multiple grantees kind of take up that offer and attend multiple sessions. And then next was our kind of follow-up and accountability process. So after each coaching session, we documented the main points of the discussion for the funder, and then we also sent grantees a recap email with key takeaways from the session, their action steps, and resources that they could use right away. And the results have really just been fantastic. So the funder has shared with us that grant reporting has improved significantly, that grantees now better understand how to design their accounting systems, how to really create cost allocation policies and apply them consistently. And we've also been able to make some good strides in helping grantees strengthen their internal controls so that they do have proper approval processes and documentation. Especially for those smaller organizations, and this is going to really protect them against risk of error and fraud. So this project, I think, just really was a great example of the power of collaboration between the funder and the grantees, and of course us, and really just listening first, then tailoring solutions specifically to their needs, and then providing ongoing support. So I think at the end of the day, it wasn't just about compliance, although that was a really important part of this, but we were really able to help build capacity and confidence for nonprofits that are just doing really critical work in their communities. And what I loved about this project was that it really gave us an opportunity to assist a lot of those smaller CBOs who may not normally be able to afford our services. So it really helped us kind of get in early and assist with building their infrastructure. So that's the example from this California Foundation. So Rachel, I'll hand it back over to you.
Thank you so much for sharing. I think hearing how others are doing things is always so interesting, and they definitely can spark ideas. All right, so education is amazing, but you might have a partner that's just in a crisis situation, and what would help more than anything is just getting a set of hands in there to support them. So now we're going to talk about direct support. So what might that look like? Well, different organizations have different needs. And to break things down a little bit more, we came up with this graphic of a nonprofit life cycle. So they start in startup mode, then they go to growth, which sometimes happens quite suddenly. Then maturity is where a lot of organizations spend the bulk of their time. But then some might also go to, let's just call it a renewal phase, where they might be shrinking or shifting or reinventing themselves. So we'll walk you through some examples of how we can meet partners where they are. But first, if you still have your phone handy, it should now have advanced to the next question on the Slido poll. So what life cycle stage do you fund? And you should be able to select more than one here. While you're working on that, I'll just share that we're next going to go through each of these phases and talk about common pain points that you might be hearing already, or you might be able to now listen for, along with solutions for those different pain points. And we're going to be sharing real examples throughout. All right, so thank you for participating. I always think it's so interesting to see what our peers are doing. So a lot are funding growth and startup, which is really great, as well as renewal and maturity. All right, so first up, the startup phase. Here are some common pain points. Of course, this isn't totally comprehensive. Every organization is different, but commonly newer organizations or just smaller orgs that have come up organically might not have an accounting system yet. And for those organizations, we get them set up on QuickBooks Online. If you are not familiar with TechSoup, it's a place that nonprofits can get software significantly discounted. And the expensive version of QuickBooks there is $150 a year. So pretty inexpensive to have an accounting system. We do this all the time. And it's very common that they might not be a numbers person, right? We find that a lot of nonprofit leaders and small to mid-sized organizations are just not comfortable with understanding finances. And for these newer organizations, the straw that breaks the camel's back might be getting that first grant that requires some tracking because it's restricted for a particular program. And that can be tracked within an accounting system once we have one, and we can train people on understanding financials and also in that important tracking. And then often new organizations don't have procedures in place. They may be operating with one person doing everything, and it might even operate similar to how they manage their personal finances. But by having additional fractional support, they can have checks and balances, as well as having experts, access to experts on their team who are well versed in setting up systems efficiently, and using the latest technology. So we have some solutions suggested here. And in this case, many of these are one-time projects that can really get a nonprofit on the right track, similar to what Jennifer was saying, helping them build up that initial infrastructure. So let me give you an example of this. We worked with a national funder, and they happened to be receiving federal funding and passing it down to various small organizations in their network. And by small, these orgs had annual budgets under $500,000. The foundation actually had a decent sized internal finance and compliance team, and they recognized that these partner organizations didn't have the infrastructure in place to manage the federal funding to the level that's really required by the government standards. So in this case, the initial start to this program was partially about supporting grantees, but it was also partially about the foundation's own accountability in managing these federal grants. So their internal team didn't have the bandwidth to implement the solutions, so they hired YPTC to help 5 of the partners that needed the most help as a pilot program. They needed things like getting onto QuickBooks from having no accounting system, setting it up to track the federal grants separately from other funds. And we were also able to help them with some simple automations, like using bank feeds in QuickBooks, which is really like connecting the bank account to the accounting system to make data entry a lot faster and easier. So we helped them put policies and procedures in place, did this basic setup and training, and then it allowed them to move forward on their own independently. And then after this project, which really the foundation, they spent about $25,000 to help these 5 grantees as a pilot program. And then they could bring that back to their board to get additional funding to support a larger cohort in a similar way. And our team really enjoyed this project because things that accountants do every day were really enlightening for these grantees, like the bank feeds in QuickBooks. They were so excited to see how their work was going to be so much easier with these new systems that we put in place. So now moving on to growth phase, which, as I mentioned, it can sometimes come on pretty quickly. And often the systems that they were using when they were smaller just aren't working anymore. They weren't built for scalability. They need systems updates to be scalable as they grow. And usually these organizations have grown quicker than their back office team, and often the books are then behind. They may need an extra set of hands in the short term or even on an ongoing basis. They may have new restricted grants, again, that need separate tracking, and they may need to allocate costs for the first time to be able to spread things appropriately, like Jennifer was mentioning, to the different grants. And if the books are behind, then usually the financials are behind too, which means management is really flying blind, and they may be struggling to provide financials to their funders or even to bankers. And in these cases, having a dedicated resource that's just focused on this every single month can ensure that it happens and it happens timely. Sometimes it's harder for staff to maintain this routine of closing the books and doing financials monthly because they're getting pulled into all different directions with the day-to-day. So finally, expenses might be outpacing revenue when you're growing, and this can be tricky to navigate. So you need to hire people to grow the organization and raise money and create programming, which will bring in the funds, but they may not have the money on hand yet or committed yet. So those types of organizations really need to be closely monitoring their finances, forecasting, and even planning for various scenarios. So let's get into a few stories. First, let me show you what a growth phase can look like. This is an excerpt from our podcast, Mission Business, and it features our CEO, Jennifer Oliva, in conversation with Catherine Lott, who was the CEO of Southern Smoke Foundation when they experienced dramatic growth. Just a little background, Southern Smoke provides financial support to food and beverage workers when it's needed most. So this goes from farmers to fry cooks, servers to sommeliers when they're facing unforeseen hardships or seeking mental health care. So you can imagine during COVID, when restaurants were shut down, there was a huge need in this community. So now I'll let Catherine Lott tell you the rest of the story.
Of course, I'm sure that you saw David Chang on Who Wants to Be a Millionaire.
Yes.
But again, you know how all of that works. You know, who knew that we were going to have the first celebrity to win $1 million on Who Wants to Be a Millionaire? We can't take credit for that. That's all David Chang. But then he goes on The View, and then he goes on all of the morning shows and Jimmy Kimmel and all of a sudden people are talking about Southern Smoke and who's Southern Smoke. Yeah. And then that parlays into other celebrities saying, wait a second, this is the coolest thing ever. And then they start endorsing us and, you know, promoting us on various pages and various creative ways of doing third-party fundraising on our behalf.
So what are some of the process challenges that you have had to make all this happen, let's say pre, during, and post-pandemic?
As we were going into this storm, and the numbers were increasing. In one day, we got 25,000 applications. I mean, it was just, the waves were coming, and these beautiful people were coming on board with me. And like I said, I wasn't going to deter from our practice. And though I didn't have the infrastructure, and so every single day I was committed to sending out those grant amounts via ACH to get money into their accounts quickly. Because that's key during crisis, is quickly and safely. And so every day, my now operations manager and we would just literally spend hours going through, double checking every routing number, every spelling of every name, every account number, and then, pressing that send button, because once it's gone, it's gone. And honestly, that's when I called you guys. That's when I called the part-time controller. And I looked around for a while for a recommendation, and I figured there would be so many people out of work that it wouldn't be hard to find someone. But actually, of course, everybody needs their financial officers during a major crisis. And so it was very highly recommended to me that we look into you guys, and it was a godsend across the board. I didn't just have one person come in and help me with heavy lifting. I had a whole team just take it off my plate, and that was magnificent. It saved us, hands down. It saved us. We could never have done what we have done. We never could have gone through the pandemic. We never could have helped all of these people and been as successful as we are. At the end of the day, we're a financial institution. It is all about getting that money from our pockets, from somebody else's pocket into our pockets, out to somebody else's pocket. So without that ability, we would have crashed and burned also. So really, I mean, thank you, and hats off to everything that you guys have done.
Well, Catherine, I mean, I have goosebumps. I mean, that is so great to hear, and I just
it is very much the honest truth. That is no bull. We've had nothing. We had Chase Bank. That's what we had. We didn't even have PayPal. We didn't have anything. We had some weird event ticketing something or other that could take donations if somebody really wanted to give them to us. So that's how sparse we were. And so once we got everything into place, then we were able to establish a platform. And Ade from your team has been the one really helping lead this effort. It's called Kindful. It's nothing too sophisticated. But first he got us on QuickBooks, first of all, which talks to PayPal, which is amazing. And now QuickBooks and PayPal are talking to Kindful, and everything's been uploaded, and we just finished our own onboarding to that platform. And so we're about to go live with that system. And so it's incredible. I mean, I can even use Diane's reports. Diane is our other team lead. Yes, she's amazing. And she's a very calming force, which is always nice. She is able to not only walk me through all of our finances and projections, because we have, a lot of times we'll have over $100,000 go out the door in a day. And that's like 5 days a week. And when you're talking about that much money, that's scary. That's it. And I can rely on Diane saying, hey, so we've got plenty of money over here in Chicago, but if we're doing this in, let's say the Gulf Coast Fund, you need to know where we are there. And we're able to get on the phone weekly, and I have those checks and balances, and I have that peace of mind, so that every day when I'm granting these amounts of monies, I know where we stand. And if we don't have quite enough, I know also where to look, and I know how to speak to the donors in a very real way. And that's been such a huge blessing to come out of this in such a healthy, well-rounded way, and be able to say that to the folks that have supported us, that yes, don't get scared by this growth that you're seeing. Your money really went to exactly where you intended it to go. And that's just sort of one of the million things that they have brought to the table for us.
I love that story. All right, so now I'm going to hand it over to Justine to share another story.
Thank you, Rachel. And so my story is about an organization similar to Southern Smoke, where they had an explosion kind of all of a sudden, and we're not ready for that. So this is an arts and culture nonprofit in Texas that really desperately needed our services. They had recently hired their first executive director. The founder had been in place for many years, so this was their first time to really have a professional at the helm. And then that professional went out and opened up a whole capital campaign, and they received a ton of restricted funding for that capital campaign. Unfortunately, the only accounting support they had was a volunteer who used the bank account to import transactions into an outdated accounting system monthly, and he would just guess at the categories. And then they would try to get that data in shape enough for the annual audit and the 990 filings, so it wouldn't really get looked at again, other than just dumping it in the accounting system monthly, no reconciliations, no processes, and then looked at again at the end of the year, where it was really a big attempt to convert it to GAAP accounting and to get it ready to be actually audited. The audit was also performed by a volunteer and was not high quality and was about 2 years behind. So when the organization had gotten all of this restricted funding, their grantors were starting to have concerns. And one of their grantors, a Texas-based foundation, was really talking to them about how important it was to get their systems in place and to improve their financial reporting and the timeliness of their financial reporting and those grant reports. And so they came to us and we gave them a proposal for how exactly we would go through the process to get them fixed up and ready to go. They then took that proposal to the granting organization that had given them the largest amount of capital campaign support and who was the most concerned about the delays in their financial reporting and was really doing the most to encourage them to make these improvements. And they took that proposal to them and said, the problem is we only have restricted funding. We don't have a lot of unrestricted funding. We certainly don't have enough for this kind of big lift to get us where we need to be to properly administer the grants we've already received and to carry out this capital campaign. So that foundation did an amazing thing where they said, okay, we're going to build a restricted grant just for this project. And they restricted it to the proposal and the services we had outlined in that proposal. And what we were able to accomplish with that funding was that we were able to give them detailed processes for all of their accounting. We were able to put in place proper accounting software. We were able to put in place proper donor management software. We were able to put in place ticketing software, a gift shop software, because they were running their gift shop on Excel, y'all. It was not a good scene. So we were able to fully professionalize this organization and put in place internal controls and all of the policies and procedures they had been desperately missing. That was year one. Year two was we're going to teach them how to budget and forecast. We're going to teach them the financial reporting. We trained the board, we trained the staff on looking at those budget to actuals and making decisions based on that financial information, because they'd never really had it before because all of their financial reporting was only once a year. So they had never been able to interact with this data. It changed the way the board governed. It changed the way they raised their unrestricted funding. And then in year three, we helped them hire and train a CFO. And we trained up that CFO, and we even stayed on to provide additional oversight and support to that CFO until everybody was really comfortable with the relationship. And so in 3 years, we were able to take this organization from being 2 years behind on audits, not really getting what I would call a real audit, right? To a fully professionalized organization with a full suite of software, a management team that was very competent at running the financials day to day, that was very comfortable reporting and talking about the financials. One of the things that I found most rewarding about that project was that we had quarterly check-ins with the executive director and the grantor, so and that foundation. And their program manager was able to encourage them along the way on implementing some of the recommendations they were concerned about, when they were concerned about how long internal controls would take. It was lovely to have a foundation saying, no, this is really going to help you. So, and it was a wonderful partnership for us to have with the foundation and with the organization. And it was so successful. We're in talks to continue to maybe continue that process along with some more grantees. So I'll turn it back to Rachel.
Thank you so much, Justine. Really appreciate that story. Really bringing up a lot of the pain points that we just talked about. All right, so then moving through the wheel to maturity phase. This is really just a nonprofit operating with a similar size budget or modest growth. Their financial management needs can really vary, but here are some pain points that you might see, that we certainly see. Staff shortages, whether it's a sudden vacancy or just more hands that are needed during busy times like audit prep or budget time. There might still be lack of expertise. Unfortunately, we see that even in mature organizations, the finance team might not always have the right expertise to have clean audits or provide useful information to management and the board. And in those cases, they may need some expertise on a fractional basis. Keeping pace with technology, a lot has changed in the last 5 years. A lot has changed in the last 6 months with the pace of technology. And nonprofits, unfortunately, are not some of the first adopters for new technology. So to have someone with more expertise that can take a look at their processes and see if something could be done in a more efficient way, which is often safer and less error prone as well. And one very simple example of this is eliminating paper checks in favor of an automated system. Paper checks are more and more putting an organization at risk for fraud. I live in New York, where it's very common for mail to get stolen, and where when the routing number and account number get out there, people can make checks that look real, present them to be cash. Anyway, that's just one example of how technology has really changed in the last 5 years, that many organizations are no longer using paper checks once we work with them. And then finally, board engagement is a common issue for nonprofits. Often board members don't understand the financials, so they don't ask questions, and sometimes they can miss really important flags. So this can be helped by hiring an expert to prepare the financial reporting so it can be presented in a way that makes sense to all the board members, not just the CPAs on the board. So let's look at some examples. So one of the pain points that we see often is one, organization's not getting accurate or timely financial reports. And even more than that is nonprofits not understanding the reports. So this is an area where our team really excels in helping and is so passionate about helping tell the organization's financial story, not only through numbers, but through narrative and graphics. So here's an example. This nonprofit had an unexpected large expense at the beginning of the year, and rather than just presenting your standard looking reports with a big red number on it, it's clearly discussed here, noting the implications to cash, the implications to the year-end forecast. And this memo also talks about other information going on to help the reader of the reports know very quickly what is happening this month, what the reports are really trying to say. So I can demo these reports. See if this works. All right, it's on the right screen. Can you all see the PDF now of the reports versus the PowerPoint?
Yes.
Thank you so much. All right, so here's the memo that I gave a snapshot of on the slide, really explaining the big picture, the executive summary, giving highlights of key things that happened in revenue and expenses, then even giving some updates on the audit progress and some recommendations. They had the paper check issue that I just mentioned. So we're recommending that they use a software solution like Bill to reduce these risks. Then there's some charts to help to tell the story. This is the balance sheet, how this year compares to last year. And then moving on to the revenue and expense, I guess what sticks out here is this direct assistance to individuals. We had a huge expense. We had no budget, but that's already been addressed in the memo. And really these charts and graphs, this is a demo example. These would be completely customized to any organization to highlight what we need to be telling management or the board for this particular month. So a lot of variation can be seen here. But then this shows our cash projection and how it compares to our benchmark, which is the board's goal for cash. And then this is just a very high level snapshot of how our new forecast with that new information about that unexpected expense is now comparing to that original budget. And this is all before going into just the standard reports that every nonprofit should have. The statement of financial position, which is also called a balance sheet, the statement of activities, which is also called a P&L or an income statement, and then a rolling forecast. So they can see throughout the year as we progress through how are we doing compared to our original budget? Do we look like we're going to be doing better than our original budget or worse than our original budget so that we can take action earlier in the year? And then this shows how it's going to impact their cash throughout the year so that they can see if they need to tap into borrowing or anything like that. So that's an example of how we would do reporting for an organization. Again, it's all completely customized, but that's just an example of how it goes beyond just the numbers. So finally, the renewal phase. This is a nonprofit that's really shrinking or reimagining itself. Often these nonprofits are trying to tighten their belts as they're often dealing with less revenue in this phase. And really, this is when they need the most financial support. A lot of the examples listed here, such as scenario planning, really we could do a whole presentation on forecasting and scenario planning, but we're going to go deeper on the last point, which is helping the board to understand the situation, which is often a real pain point for these organizations. Management feels like they're going it alone because the board just doesn't understand what's happening. All right, so a picture is worth 1,000 words, especially when we're presenting to the board. And this is an example that we did for a client that was a membership association. They were earning more in revenue each year. They were getting out of their slump and starting to grow their revenue, but an increasing percentage of that revenue was donor restricted to specific programs. So the client was having a hard time covering their overhead. Excuse me. So our data visualization team came up with this presentation to get the board's attention with these two charts that work together. So you can see on the left here, total revenue is trending up, but the unrestricted revenue isn't keeping pace. So it's a single complex thought that is written out as a single complex sentence, but the first part of the sentence is represented by a graphic on the left. The second part of the sentence is represented by a graphic on the right. And this made it really clear to the board that yes, on the left, we can see the revenue is trending up, but on the right, look at that rising gray bar. Donor restricted is really significantly growing. And this was a message the client was really trying to explain, management was trying to explain to the board, and they just weren't getting it. But seeing it represented like this really got the message across so the board could really step in and help with the problem, raising unrestricted revenue. All right, so here's another example, and this one is really a snapshot of a profit and loss for an arts and culture organization. And in this case, they had to cancel their gala, which was prompting a crisis situation. And it was a little hard to articulate because some of the cancellations converted their tickets to donations, but then also some of the expenses, it didn't have to be paid because the event was canceled. So how can we see the total impact of that? So this is what we came up with. So the title of the chart gets straight to the point. Gala cancellations are impacting our bottom line. And then it elaborates that the pandemic-related cancellations were causing this with some more detail there in the paragraph. But you can see that the dark bars are the actuals laid over top of the budget bar, which is the gray. It's a format that many people are used to seeing, like almost like a fundraising thermometer chart. But at the bottom, it makes it really clear when you see the net, when you see all of the revenue compared to the budget, even though some things were converted to contributions, having some reduced expenses, it's still having a pretty significant impact on that net income. And this story for their finance committee really helped drill in this idea so that they could really spend the meeting, instead of just trying to understand what was going on, they could spend the meeting figuring out what they were going to do next. What strategies can we take to help with our financial situation? And really, that's the point of these graphs is how do we get the message across quickly, clearly, and easily so that our board is not just trying to understand the numbers. They're spending that time that they're volunteering for the organization to come up with strategies to help solve the problem. All right, the last poll, if you still have your Slido available, this one is an open text. What's your biggest pain point for your grantees? We talked through some common things that we see today, being short-staffed, audits being behind, having the bandwidth to do financial reports, not understanding financial reports. Is there anything in particular that you're hearing out there? Just a little bit of typing happening. I know that open text is a little more challenging. All right. Well, in the interest of time, I'll just keep moving along to how funders can help. I know it's a lot of information on pain points about what your grantees are going through, but what can funders do? So we really came up with 3 primary ways. One is capacity building funding, whether this is a program that you have or whether this looks like unrestricted support to you, giving the grantee partners the funding to be able to invest in their finance department, or maybe you're even introducing them to YPTC or firms like us that can provide these services. Or you could follow the lead of Justine's client and have restricted funding just for this type of support. Second, education cohorts, like in Jennifer's story. You can offer trainings and even coaching sessions to help build financial acumen. And again, that also creates the opportunity to convene your grantees, and then they can meet peers who may be having similar struggles. And finally, funding direct services, like my example of the 5 small organizations that needed basic setup. Really, at any life cycle stage, you can offer responsive, adaptive, non-monetary support to bolster their financial capacity and organization health. And you may see this opportunity to be responsive to grantee needs and then provide direct consulting services to get them immediate help in their finance department. I know funders want to be responsive to grantee needs, so I hope this gave you some ideas of some of the pain points and the common solutions for solving those pain points. And you can be part of the solution. So we have a few minutes if you have questions, or maybe if you want to share anything that you might be doing already in this category. I know that when I go to conferences, I talk to a lot of foundations that they see this need, they want to get involved in this need, and they're just trying to figure out exactly how to make it happen. So I hope that this gave some ideas on that, but if you would like to chat later or offline, there's also some contact information. Well, it was really a pleasure spending time with you this morning. I hope you got something to take away from today, and feel free to reach out with any questions.